It's been a crazy few weeks for SoFi. After dropping nearly 50% from January to April, the stock rallied back 30% by the end of the month, and then has been steadily creeping up again over the past few weeks. But macroeconomic factors are playing a major role. Could we get a cut to rates that would boost SoFi stock very soon? And what is the outlook for the rest of 2025? SoFi as a company has shown incredible growth quarter after quarter, year after year. And we've finally seen that reflected in the share price towards the end of 2024. Before we get into the video, if you find any value in this, can I ask you to smash the like button? Literally costs nothing, but it helps the channel out so much. I'm aiming to get 500 likes on this video. Help me achieve that goal. For anyone that's new, make sure to subscribe so you don't miss out on any new content like this. I'm not a financial advisor and this is not financial advice, so always do your own due diligence. Now let's get straight into it. So SoFi is a fintech that offers a range of lending and wealth management services. The company primarily caters to early stage professionals and offers variable and fixed rate, parent, personal, and MBA loans, mortgage refinancing, and more. They create modern financial products and services that help people borrow, save, spend, invest, and protect their money better so they can achieve financial independence and realize their ambitions, which could be owning a home or saving for retirement, paying off their student debt, and much more. So SoFi is a fintech company that is positioning itself as a one-stop shop for all your personal finances. Now, I see so many people commenting on SoFi, calling the company a startup and treating this like a company that was just founded. But SoFi was founded more than a decade ago in 2011, and a lot of people seem to be thinking that this company has only really existed since going public less than 4 years ago. But the fact is that this company was a decade old before it was listed on Nasdaq. It's still a growth company with huge potential and still at the very early stages and where you consider digital banking is at the moment. But this is not a risky startup that is only in its very, very beginning. This is well established. And fintech is one of the most promising megatrends which will disrupt the way we go about obtaining financial services. So considering the promising fintech industry's prospects, together with SoFi's strong execution, I think that the company is poised to become a notable player in the evolving banking industry. Then there is the fact that fintech is projected to become a $1.5 trillion industry by 2030. The fintech sector currently holds a 2% share of the $12.5 trillion global financial services revenue. It's estimated to grow up to 7%, of which banking fintechs are expected to constitute almost 25% of all banking valuations worldwide by 2030. In 2022, fintechs on average lost more than half of their market value, but according to the research, this plunge should be considered a short-term correction in an otherwise long-term positive trajectory. Now, some big news that is expected for Monday is that crypto broker Coinbase is set to join the S&P 500, while eToro's IPO last week, which seen eToro stock rise up to over $70 from its IPO price of just $52, is creating a halo effect across fintech, where stocks such as Robinhood and SoFi are likely to benefit too. With eToro CEO Yoni Assi stating that fintech is back. eToro's IPO is the first major fintech company to go public since 2021. Now, in case you missed it in the past week, SoFi CEO Anthony Noto continued to outline a multi-pronged strategy centered on membership growth, product adoption, and long-term profitability at the JP Morgan Global Technology Media and Communications Conference. The company has guided to over 30% annual membership growth and mid to high 20% revenue growth while maintaining a goal to reach 50 million members within 5 years. Now just think about that for a moment. Over the past 4 years, SoFi has gone from just 3 million members up to close to 11 million, an increase of nearly 8 million members in 4 years. But Anthony Noto believes that they can expand to nearly 40 million members over the next 5 years. That is insane growth. Anthony Noto reiterated an earnings guidance range of 55 to 80 cents EPS for 2026. Incremental EBITDA margins are targeted at 30%, with the company expecting to reinvest 70% of the incremental profit while dropping the remaining 30% to the bottom line. Again, Noto said that we do believe we can achieve the mix of business and capital efficiency to have a 20 to 30% return on equity, and that has not changed. Now, just think about this for a moment. If SoFi is guiding for between 55 cents and 80 cents EPS right now, based on the current expected memberships and revenue levels over the next 12 months, then what would the EPS look like in 5 years' time if SoFi have over 50 million members, assuming, of course, that they are maintaining margins? Ask yourself if this stock would still be valued at only $13 then, or would it in fact be much more? Leave me your SoFi price target in the comments below and let me know what you're expecting for the rest of 2025. Looking at the SoFi charts over the past 3 months, we can see a number of interesting things here. First of all, the stock is on a strong upward trend over the past 6 weeks. Now, it might not seem like it to some people, but having gone as low as $8.50 back on April 8th, SoFi stock is actually up over 60% since then and is sitting in a very bullish position right now. After SoFi hit its 52-week high of 1840 back in January, the stock had been on a downward trend. This we already know. SoFi was consistently recording lower highs and lower lows for more than 2 months. But since April 6th, SoFi has been recording higher highs and higher lows, confirming this trend on multiple occasions. Even after the pullback at the end of the week, back to just 1350, this sits nicely in this trend. Looking at the MACD and RSI, these are also signaling a bullish move to the upside, and I'm expecting SoFi stock to move back upward again over the next 2 weeks. But what do professional Wall Street analysts think about SoFi stock right now, and do they rate this stock as a buy? Looking at Market Beat, we can see that the consensus price target for SoFi stock is $14.38. This is according to 16 Wall Street analysts. Out of the 16 analysts, 3 have given a sell rating, 5 have given a hold rating, and 7 have given a buy rating, with one analyst giving SoFi a strong buy rating. Now, the most recent of these was set last month. But interestingly, all but one of the recent price targets are above the consensus, with Needham & Co. rating SoFi as high as $20. Is SoFi technology stock a millionaire maker? While SoFi has found a tremendous product market fit thanks to its focus on better servicing customers, management is optimistic that earnings will soar in the years ahead. If SoFi can continue executing like it has, there is a sizable potential for shareholders over the long term. But is this fintech stock a millionaire maker? Here's what investors need to know about SoFi. First of all, SoFi continues to register impressive growth, which we've already seen. They offer a range of financial services and lending products, but SoFi also has a platform that other financial service entities can use to offer banking products to their own customers. Regardless of what offering we're focusing on, technology is at the core of everything that SoFi does. It's probably not much of a surprise that the company has registered such phenomenal growth. Total net revenue increased 172% between 2021 and 2024, and it was up 20% in Q1 2025 on the year-over-year basis. This is despite ongoing economic uncertainty. Now, as we seen a moment ago, SoFi membership has grown from 3 million to 10.9 million in the past 4 years, but it is up more than tenfold from the end of 2019. Clearly, the company is doing something right that has allowed it to find such an incredible product market fit. But importantly, products are trending in the right direction. In 2023, SoFi reported a net loss of $300 million. This continued a streak of operating in the red for the company, but this was okay because management was fully focused on driving growth at all costs. However, in 2024, the business turned the financial corner. SoFi reported net income of nearly $500 million last year, translating to a solid net profit margin of 18.7%. The leadership team expects the bottom line to expand in the years ahead. Wall Street seems to agree with this, with earnings per share projected to grow 87% between 2024 and 2027. But factors like competition, macro forces, or management decision making can all get in the way of such amazing performance. However, based on the company's track record thus far, investors might want to give SoFi the benefit of the doubt. When we talk about SoFi being undervalued at the current price, Remember that SoFi is trading well off its record high. Today, the stock is trading at a forward PE ratio of 50.3. This obviously doesn't look like a bargain opportunity at first glance. However, if you believe that EPS will rise meaningfully, then the current valuation looks much more attractive because SoFi is a smaller enterprise and this is attacking a massive industry. This has the potential to make investors millionaires one day. But what do you think? Is SoFi still a solid investment now for 2025 with the stock down nearly 30% since February? Remember that SoFi stock also dropped significantly in Q1 last year before bouncing back stronger than ever. Let me know your thoughts in the comments below and always do your own due diligence. Remember that I'm not a financial advisor, but if you enjoyed this analysis, then please like and subscribe. I hope you make a load of money on this stock. Follow me on Twitter and I'll catch you in the next video.